So welcome back to Everything Marketplaces, where we talk with marketplace founders and leaders from some of today's top marketplaces. So this is episode 21, and I'm really excited to welcome on Rob Petrozzo, who is currently the co-founder and chief product officer at Rally. So if you're not familiar with Rally, it's a platform for buying and selling equity shares in collectible asset classes, such as cars, watches, trading cards, and even Birkin bags. And this morning, they actually just announced a $17 million funding round. So huge congrats to the team on that. So Rob, before we jump into talking about Rally, let's maybe start off by you sharing a little bit more about your background for those that might not know you, and then what led you to start Rally.
Yeah, thank you for the intro too, dude, and thank you for the congratulations. This is you know how it goes, man. Raising money is great, but that's like fuel for building the rest of this business. So now it's like day one all over again.
Yeah.
But to give you the quick rundown, my background was always in design and then in product. So when I got out of school, it was forever ago. But the idea of being an artist was like my dream, and that's like actual fine art. But then you get out of school, and there's a lot happening around you, and it's impossible to make money doing that. So the switch to turn to product really happened in 2007 when the iPhone came out, and this whole new ecosystem was being created around me. And I had a lot of great people around me that were sort of designers that were making this transition to Web 2.0 and into app development. And so much of it was self-taught back then. So, the degree was great, but that degree was really what led me to sort of be self-taught and self-educated on building what I wanted to see in the market and what I want to see in marketplaces. So that led me to leading product and creative at a couple of digital publishing companies, working with bringing some of the earliest big magazines of the mid 2000s and the late 2000s onto the iPad and the iPhone, like Vogue, Oprah Magazine, Esquire. Work with a bunch of big pharma companies, developing out their content. Wound up early at a couple of startups, leading the product team too, where it was kind of just tech, and then leading out what that product build would be. So wound up at a company called Kimi here in New York, which is a digital locksmith play, which is also big in the computer vision space. Worked with a bunch of hedge funds to build their internal software. And then, over the last decade or so, sort of learning as much as I could about the space and about marketplaces in general, and about how consumer behavior affects the apps that we're building. Myself, my two co-founders, Max and Chris, we've known each other for a long time. I was in the product space. Max was at Barclays doing private placement deals for a long time. Chris was a media operator and somebody who really understood the ins and outs of this business. Together, we realized that A, we should be working together, but B, we all had these individual disciplines that led themselves that really could create a great consumer marketplace if we worked together on it. And that led to Rally in 2015, 2016, and then launched in 2017.
Nice. Yeah, thanks for sharing more on the background on that. Rally is definitely, I would say, it's probably a market leader as far as, allowing people to invest in alternative asset classes or collectibles. So what was the journey like, in the early days, kind of starting that? And, what were maybe some of the, legal considerations that you had to deal with, maybe some of the business kind of nuances and whatnot?
Yeah, I mean, there's the right question, and that's a question that not that many people ask or bring up, the specifics around the legal aspect of it. So I can tell you that the first 2 years of our business, or 18 months or so, was really about understanding and navigating that legal and regulatory platform. And it was something that was still kind of brand new. So to give everybody kind of insight into the way we build out these individual offerings, we take all these super rare assets and we turn them into small companies. They're essentially one company that owns one asset. That asset is whatever that collectible is. It has its own market cap, its own investors. It has its own sort of, liabilities and insurance and maintenance and all the things that go along with it. So it's a little bit tough when you're starting from the ground up to just sell it like you would e-commerce. So the first thing that we did was go to the lawyers, understand what Reg A actually works for, which is the laws and the regulatory construct that we leverage. It was something that was sort of spearheaded by the Kickstarters of the world. And it was something that was really intended to allow for regular everyday investors to invest in things that aren't necessarily typical, that aren't equities. The way we did it was brand new to the SEC, who's the regulatory body that governs what we do. So when we started thinking about what this was going to be, we took one offering, which was a 1977 Lotus Esprit, which is this $77,000 car, but it's one that comes from an era that a lot of the supercars, the Ferraris and Lamborghinis, really started to get focused and get attention as potential investments, and as cars that really push the envelope on design. This Lotus was one that, not just from an investment standpoint, we thought made sense, but it was a lot of the base for what Elon Musk did at Tesla. A lot of it was based on early Lotus designs, a lot of the Teslas that you even see today, the Roadster in particular. So we knew it kind of had this cultural relevance, it had this great investment worthiness, but also it was this thing that the SEC had never seen before. So doing that as a company meant going to sit with our lawyers, spending a ton of money out of pocket to make this work, to get the constructs in place to make it work, presenting it to the SEC in the most easy to understand possible way, and then crossing our fingers. What wound up happening was, around 9 months after that first submission, we got an approved investment back. We're able to put it into the app. And then the first asset with very little marketing got funded, that $77,000 from around 200 investors in around 45, 50 days, give or take. So that was the first one. Now we're at a point, 4 years later, where we do a $250,000 asset. And it could be anything from a car to a baseball card to a vintage handbag. We sell out that IPO in around, give or take, 2 or 3 minutes usually. And then our secondary market has full trading capabilities back and forth after 90-day lockup periods for investors to exit their shares or for new investors to get in, all through that regulatory construct. So the legal aspect was most important. I think that's something a lot of business owners don't take into account early. It's the worst money to spend. It feels terrible giving lawyers, $1,000 an hour to look through paperwork and file on your behalf, and they're never moving fast enough, and you never get exactly what you want out of it. But without that legal construct early on and without those check marks, the business probably wouldn't exist right now. And we're pretty confident that the industry probably wouldn't exist right now, as kind of we created that template for moving forward with investing in those alternative assets.
Awesome. Yeah, thanks for sharing more on that. So maybe let's speak a little bit more about the early days, as far as, you did mention the Lotus. And, I know now that when you guys launch like or IPO something, that basically, you're able to sell it out very quickly, sometimes within minutes. So, if we kind of take a step back and think about, on the supply side, so the cars that you initially listed, how did you think about selecting those and then, eventually kind of expanding categories?
Yeah, so we always looked at cars. To us, that's something that for me, from a design perspective, for my co-founders, Max is from Germany, so Porsche is like a religion in Germany, and Chris was somebody that the real basis for the business, he chose to buy a house when he had enough money to do it, as opposed to buying a very specific Porsche that 10x from the moment that he bought the house, so it would have been a better investment. All those were check marks for us for cars, and we knew it made sense to start there. But what we found is that that's an asset class that, from an aesthetic standpoint, everybody can appreciate, even if you don't appreciate cars. It's something that the last 4 or 5 years, the aesthetic all over Instagram is like late 70s, early 80s, and then moving into the 90s now. But it's something that has this emotional connection, whether you're into car culture or not. We felt like if we can get something approved as a car, which is this big 2,500 pound, greasy, dirty thing that's not an investment, that the whole world thinks is a depreciating asset, when in fact the best versions aren't. If we can get the SEC to understand that, our user base to understand that, and get people to spend some money on it, we felt like all these ancillary items and these other categories that lived right next to cars, whether it was vintage watches or vintage luxury handbags or even baseball cards and some of those same, what were considered the trappings of wealth before we came into the space. If we get people to understand cars, we felt like there was an easy entryway to start creeping into these other asset classes. So when we made the name of the company, it was originally Rally Road. Everyone thought that was based on cars, but really it was a double entendre. It was supposed to be the other Wall Street. So the idea was that you and a bunch of friends rally together, and it's not, the big tall glass buildings in New York. It's somewhere in the middle of the country where you might know everything about this vehicle or about this baseball card, but never had an entry lane. That's what Rally Road was to us. We all kind of meet there and invest in these things together. So cars was the conduit to get to everything else, with the idea that if we can get cars done first and get that done successfully, it would feed every other asset class. And that's kind of how it worked out. We got lucky on that.
Nice. I love it. Yeah, I was actually going to ask as far as, Rally Road versus Rally, but yeah, thanks for sharing on that.
Yeah, that's been the question we get asked a lot, but it's something that, like, people are like, oh, you dropped the road, you're not doing cars. And I was like, no, cars is in our DNA, no question. But the name was always intended to be like a Wall Street, not necessarily about rally cars.
Yeah, definitely. So on that note, as far as, making it accessible for the asset class, what is like the average kind of like share price that people come in at?
Yeah, so we average out right around $20 now. So we have 3 types of assets that 3 types of offerings, I should say. The IPOs are set up where Fridays at noon Eastern time is always kind of the spotlight or the marquee asset. So this week it's a $250,000 Mike Trout rookie card, who's, probably the next Babe Ruth, but somebody who, from auction results, has gotten some of the biggest auctions of baseball cards in the last 3 or 4 years have been Mike Trout cards specifically, and then trading in the millions of dollars now. So that was one that it hits a lot of check marks for us, and also has that brand resonance as an investment. Then throughout the rest of the week, we'll do things that we make sure are accessible at different price points and that always stay open. So we have assets that start as low as $1. So right now there's a Superman comic. There's I think there's a football card. There's like 3 or 4 assets that are always open. We put a small share cap on those so you can't invest more than 10 or 15 or 20 bucks. But the idea is that we want this to be truly accessible to everybody. We want to make sure the price point always is accessible as well. So we do everything from dollar shares up to $300 or $400 per share assets and everything in between to make sure that anyone that comes into the app has the ability to sort of invest at a price point that they're comfortable with.
Awesome. And then just to maybe share a little bit more about, you mentioned, so you have a drop or a listing every Friday. I feel like you guys are almost at the point now where those almost just sell out in minutes, right?
Yeah, so I think we look at things in terms of investment velocity. That's an internal metric that we track. So right now, the investment velocity of any one asset on a Friday is around $2 million. So that means that we could theoretically fund a $2 million asset within an hour with the same velocity and momentum that we have for some of the lower price assets. Our goal is always to make sure that people can get in. So, the idea of selling on hype is something that we've tried to stay away from. We've fallen into that trap a little bit in certain cases because it's impossible to tell somebody you have the best Pokemon set on earth and tell them to wait, don't invest right away. People kind of find their way to that asset and they sell it out quick. What we are committed to doing though is making sure that the market cap of each of these assets, the actual total value, and the way that we market it towards the individuals who care about it most is a little more concise going forward too. Because we want sellouts, and that's great. It's a great measurement of success, and the whole team gets excited about it, and it creates all this hype. At the same time, as a sustainable business, it's hard. I found in past life and past commerce experience and past marketplace experience, hype has an inevitable fall after that precipitous rise, and it's hard to sort of find that blend. So we're trying to do our best right now to make sure things kind of stay open a little bit longer.
Got it. Yeah. So maybe what are some of the ways, maybe within like a product, since, you're focused on product yourself. What are some ways that maybe you guys are thinking about that right now and focusing on?
Yeah, so I'll give you the biggest driver for us has always been kind of email. And email is something that we're starting to segment a little bit more based on sort of indications of interest. So when we go into our app right now, the way we've created this space is this all-encompassing kind of like marketplace of everything. We're starting to break those things out. So as a user, you'll soon have the ability to say, I only want to be notified about watches. And that's the thing I care about most. And we'll start building that reputation on platforms. So somebody who gets in 5 or 6 individual watch offerings, when we have that big Friday version of it, we're going to open up, and we have been opening up that early access to that watch. So you're the one who knows it best. You're the one who really wants to get access. You're somebody who's been on our platform for a while. We want to reward you with that. And that's something that in terms of, for us, lifetime value of a customer is super important. It's not a metric that we track as closely as some of the easier top level metrics like investment velocity and average spend, but it's one that we know is starting to develop in a way that's very meaningful for a lot of people. The other side of it is that we always want to make sure the assets lead. The storytelling is important to us as well. So telling more stories within the app as opposed to having to email it or put it on social, so that if you really do care about this asset and you care about this investment, you're going to come in, you're going to read that story, you're going to be first to act. We want to make sure that that first come, first serve isn't necessarily targeting us selling out in 30 seconds. It's targeting the people that care about it most. So building those stories out very intentionally, but not throwing it in front of people's faces and forcing them in is a big way we've been kind of A, combating that hype element, but B, making sure the people that do care about it most are the ones that get the first access to it as well.
Nice. And then you did mention that you also have a secondary marketplace, right? As far as for trading shares, could you maybe speak to that as far as like that next kind of bit of trading that you have?
Yeah, so that's a big, so the round that we announced this morning with a bunch of great partners is really about building out that secondary component. So we were first to market with a true secondary mechanism. So the way that works right now is through standard bid ask. We do it every Tuesday. So every Tuesday, 7 or 8 individual assets will trade. There's 7 trading right now, and it's everything from baseball cards to cars, like a real mix. And every 30 or 60 days, give or take, in between, those assets retrade again on a Tuesday. The way it's set up right now is that it clears at one price end of day. So our goal is to get the most buyers and the most sellers into one place and then execute at a price that gives everybody best access. So highest bid, lowest ask, it meets somewhere in between, similar to a StockX or the way that other pricing mechanisms work. we'll send a notification to everybody end of day that says your ask was met by a bid. Do you want to accept this offer? If they say yes, it's executed through our registered broker dealers within the app. The plan for us going forward is to get to a more continuous version of that, where if you bought, 3 or 4 days ago and want to sell because something's happened in the market to drive that value, you should have the opportunity to do that. And what we've seen is that with the 5 or 6 or 7 exits that we've had off platform right now, it's been in that situation. So like Michael Jordan was super hot during, and he still is, obviously he's a legend, but during The Last Dance on ESPN, that drove this whole market for Michael Jordan memorabilia up and to the right significantly. So we debuted his rookie card at $40,000. It was eaten up by 400 investors immediately. And then 7 days later, we had somebody come in and do a qualified buyout offer at $85,000. So you're giving somebody a crazy return in the equivalent of a week. We want to make sure that we're always facilitating where we can. But if you feel like you've bought an asset and you feel like you know a lot about it and it's increased in value dramatically, you should always have the opportunity to sell that to somebody else who might see that same value. So us sort of nurturing that system in that secondary market is super important going forward. That's what we're using a lot of this money for right now, is to build out that world-class secondary market so it's continuous trading going forward.
Nice. And then is that going to be, are you thinking about having like an open order so that way people can see as far as like availability and then kind of like price match that? Or is that more like
I think that it's set up in a way where it's kind of the ability, we hope, we're talking to our legal team right now, to be able to pick off those individual asks or bids if you feel like you see an opportunity. And then for us, building that out and making it feel more like the equity markets and the things that people recognize most has always been an important part of what we're building. So that's the idea, is that, if you feel like, there's a price that you're okay letting it sit on the ask or on the bid for a month or 2 months, you have that ability to do that without having to come back continuously to check on it. And if that bid or that ask gets hit, you'll get that notification that says there's a buyer, there's a seller for your individual shares. Come back in and take a look at what the price is.
Nice, nice. So then so I guess like the third kind of use case that you mentioned is someone basically comes in and offers to buy out an asset. Say for instance, the Michael Jordan card, right? So how does that actually work? Do they come in and make an offer, and then, how do you kind of like, what's the governance around accepting an offer or not to the shareholders?
Yeah, so we have a mechanism in the app that at the very bottom of each asset, it says, do you want to buy the whole asset? It's a little let's talk link. It brings up a form that allows you to fill out the price that you're intending to purchase at, some light personal details. It comes to us. First thing that we always do, because at a premium especially, is qualify the offer. So we have a team here that reaches out to that individual buyer, validates that the buyer is real, validates that the money can get into escrow within 2 or 3 days, and then we'll prepare a little miniature survey site that goes to all the investors in that asset. So there's one out right now. We have a 2003 Saline S7 on the platform, which is a $325,000 asset, which just got a buyout offer at a significant premium. So we sent that out 2 days ago to our investors in that asset, all around 600 of them. It has the full price, what your return looks like, what the percentage gain is since the IPO, and then sort of a signifier of yes or no, how you feel about that offer. We aggregate those over a 48-hour period. We bring them to a third-party advisory board who works on our behalf specifically on these exits to validate that offer. While that's happening, the money goes into escrow. If the check mark comes back from everybody involved, over 50% vote, over 50% on our third-party advisory board who makes that all-encompassing yes, no, goes back to our investors. We let them know exactly what's happening with the space and kind of with the money where it is. And then within around 7 days, start to finish, they typically get paid out on their shares.
Nice, nice. That's that's amazing. And you guys you mentioned you've already had a few of those, right?
Yeah, so other than the Jordan card, we've also had a Jordan jersey, game worn jersey that exited off the platform. The Muhammad Ali contract from the fight of the century, which I was kind of sad to see go. It was one of those assets that's really unique, one of one. A few of the cars that we bought really well, but also ones that people wouldn't expect. I think we're seeing that the under $100,000 vehicles, especially from like the early 90s and even the 2000s, the big names, Ford Mustangs and stuff like that, are really starting to sort of elicit a big response from the younger generation, from someone between the ages of 25 and 40 years old, who really understands his value, maybe has a little bit of money to spend that they might not have had when they were 21 years old. And now they're in a position to really buy those things that they have that strong emotional connection. And they're coming in with strong offers to buy off platform. And a lot of times we look at what we do as having the best possible example of so many of these vehicles or these pieces of memorabilia. So for us, we really are building a museum quality collection. And a lot of times people didn't even know these assets existed until they saw it on the platform. So if somebody with money and with sort of influence or with sort of this emotional connection, all three of those things hit, comes onto our platform and sees it, more often than not, they'll reach out and make that offer. And then we'll bring that back to our investors to close up that deal where possible.
Nice, nice. Out of curiosity, what's like the average age of the investors?
So it's around 28 right now, and that's gone.
Oh, wow.
That's skewed a little bit lower than it was previous to COVID. I think the start of Q2 2020 was very much this, a lot of people in the house and this emotional, nostalgic sort of find the things that you care most about and dive a little bit deeper. And we saw that happen really, really quickly. That was something that we didn't intend to sort of capitalize on by any means. It just so happened that we were well positioned to tell the stories that a 27 or 28-year-old wanted to hear and wanted to see. And that's the stuff from their childhood. It's stuff that's really accrued in value, where you can Google and find the auction results and see what's happened to something like, Pokemon cards, and see what's happened to things like Michael Jordan sneakers and the stuff that really makes sense to that younger demo. And those are the people that have gravitated towards the platform most in recent months, especially.
Nice, nice. And then, yeah, I'm quite fascinated by this. So basically, if I'm, say, for instance, we'll just say, like hypothetically, I'm a 28-year-old, I invested in the Jordan card or the Jordan jersey, and I receive a return. Are you seeing that those typical investors are then redeploying that, their capital back into other listings that you guys have, or what are you guys?
Yeah, that's a
seeing on
perfect
that?
question. Yeah, so we've never seen significant dips in cash on hand in the dry powder since we started this business. So right now, with a decent chunk of money, not to get too much into the details, sitting in dry powder, the money, more often than not, what we've seen from that investor, once they make an exit or trade out or get some sort of realization on those gains, it stays in their account to either be deployed to new assets, and they kind of wait it out. Sometimes they'll wait for a month or so to see the asset they like, but redeploy, or they'll deploy it immediately in the next IPO that goes live. We've seen that more often than not. And again, it's becoming that 26, 27-year-old, they're becoming such savvy investors and savvy spenders in a way that I think I definitely wasn't when I was 23 or 24 years old, 25 years old. I wasn't thinking about investing in alternative assets. I was thinking about buying sneakers to wear them and have everybody think I was cool and have the coolest sneakers on the block type of thing. And now we're seeing that, the 26, 27-year-old now, they understand what equity is. They've come from the Robinhoods and the Coinbases. They know that what is to equities, what is to cryptos, alternative assets should be a part of that portfolio as well. And they're making really smart, I should say really savvy decisions with the cash. Even when they exit, it's not that quick flip. It's more of a medium-term investment for that person right now.
Yeah. Awesome. And then, so I'm kind of fascinated by, I would say recently, just the more people that I speak with, just the different categories. So a lot of people, I feel like, get into sneakers, and that's kind of like a gateway into maybe like watches or, art, or even just, like other people that are my age, our age, that just know about Birkin bags, right? Like I'm just fascinated by, how much overlap there is with, the different kind of categories that you have. So how do people typically kind of like come into the app and start to learn about, all the different categories, that you guys offer? And like, how do you guys kind of think about that? Like introducing new categories?
Yeah. I mean, that's what you just described is exactly kind of what happens with our investor. And we've seen it the same way with we have a merch store now, and we've been doing what we're doing, close to 5 figures a week out of merch that we've created. That's really like individual collections based around these assets. We're seeing people translate from coming in just for clothing into investors at a rate that we never expected. I think the biggest driver for us has always been that emotional connection. So we talk about what we do and the stuff that we put in the app as a passion-led investment. And your passion might be classic cars. It might be baseball cards. It might be, books, rare literature. It might be these things that you have this emotional connection to. The story drives people in. A lot of times they'll put some money to work just to see how it all works and how the whole process goes. They'll see some returns, or they'll start seeing other assets on the platform, and they become big researchers in what we do and what those individual assets are. So whereas you might come in for a pair of Michael Jordan sneakers, that's a perfect example, make your first investment, and then realize it sold out really quickly. You got in before anybody else did, and now you're starting to see some gains in the secondary market around other Michael Jordan stuff. You come back into the app and you find yourself looking at, the Great Gatsby, or you find yourself looking at something from that same time period. A big rotation that we saw and a big overlap on the Venn diagram is people who own the 1980s era Testarossas on our platform, Ferrari Testarossas, and Michael Jordan memorabilia, because Michael Jordan was kind of synonymous with Ferraris too at the time, and he had those same cars. So we're seeing people come in for one thing, but the rotation becomes really active quickly. And now we have an average investor that's, again, 28 years old, give or take, but has around 3.5 to 4 assets in their portfolio, and it's completely diversified. It's rarely just one asset type.
That's incredible. I mean, it's such a great business. I love it.
I appreciate it.
Yeah. So I can only imagine just the watch market right now. I mean, is that, what are you guys kind of seeing with that as far as like the demand?
Yeah, that's a good example of kind of like demand in a space that's led demand inside categories inside of our app. We always try and look for like the genesis, like the version of what came first for all these individual assets, like that block of time or that asset type that kind of set the tone. So for us, that was the 70s era Audemars Piguet Series A series, which was like Gerald Genta's first design that really is what everyone expects to see from Audemars now. That opened up a whole world of watch collecting for us and for real collectors come in and understand what we were doing. They were met with the same people who look at the stainless steel Rolexes and the things that are really front of mind right now for so many people. So you think about, like, on our platform, we went after the newer versions of Rolexes that are just hard to find at retail. And that's, you know, the Pepsi Rolex, which is a very specific watch that everybody loves now. There's newer versions of of APs that we're looking at too, to bring in that younger investor. Then once you have all those people in the group, we start to put in the things that have the great stories. So the Tornek, which is a watch that has a crazy history, and I don't want to go down a rabbit hole with it, but it's this watch that there's only 60 that exist, and it was the original version the Navy SEALs got. It had to be made in the United States, so they couldn't use Blancpain or Rolex or any of the ones they were looking at. It's a crazy story. It's a $150,000 watch that doesn't look like it's worth $150,000, but it's one that everybody can appreciate. People that understand the story, people that love watches, and the purists and the historians around an asset. So we're always trying to hit those three kind of buckets for any asset class that we go into. I think we did it pretty well with watches and the direction that we've gone. It's a very eclectic mix of pieces that we have in the app right now for watches.
Nice. Yeah, I'm obsessed with watches, so definitely check it out and see what you guys.
Everybody is. They should be. It's something that's like, it's crazy because you look at a watch and the definition of rarity and the definition of sort of craftsmanship is really specific to a watch more than anything else. It is the same way you would sort of build a Ferrari from the ground up, or that one artisan would make one of these crazy $100,000 Birkin bags. A lot of extra effort goes into watchmaking that I think gets lost on the surface area of the stories, but we're trying to tell those stories as best as possible.
That's a great point. So yeah, so we're gonna jump into a question here with Dan in a second. But before we do, it might be a little bit lengthier conversation, but so we're talking about well, I would say the kind of like in-app experience and a lot of the kind of purchasing kind of tendencies. But you did mention as far as the merch, and then you are sitting in the retail space, which I can see see behind you, a nice car. But yeah, could you maybe share a little bit more about your guys' showroom and how you've kind of coupled that with your app and with the merch, and kind of think about that?
Yeah, so we launched this business when we first started, and we first wanted to do like our coming out party was in 2017. We wanted to get a pop-up here in New York, a place that we could fit a couple of cars in, maybe sell some sweatshirts, and just kind of get some people around that were friends and family to show them what we were up to in a more tangible way. So for us, we realized when we did that with very little marketing, we did it on a Thanksgiving weekend. We had a lot of people come out, a lot of great questions, like some celebrities popped up, and it was a great foot traffic, and a bunch of sponsors came in and wanted to do like liquor for us or do food, or it just opened up all these great conversations. And we realized that so much, especially now, everything's kind of closed. You realize how much it sucks to not be able to interact with people one-on-one. Everybody looks at communication as something that's not scalable. But for us, like personal communication, for us, that's such an important part of what we do. And for me, in any marketplace business, in any business I've ever been in with a consumer, you have to over-communicate that. For us to do that effectively just in the app with these assets that are impossible to understand without seeing them sometimes wasn't going to work. So we rented our new office 2 years ago in Soho on a block of Lafayette Street that's right in between. Supreme is 1 block north, and every important restaurant is 1 block south. StockX opened across the street from us. So it's this hub where you have all this mix of consumers, investors, people with money, tourists, people that are just strolling around the neighborhood and want to be in a cool part of New York. for us to not have this space, which is right below our office now, once it became available, it made no sense not to. It was it had the structural integrity to hold a car. We knew we could build it out however we wanted. We have a great landlord who said, do whatever you want with it. And for us, the billboard value alone was great, but to be able to have that communication with people off the street where we literally just open it in the middle of the week and say, like, you know, if you want to come in, we keep one security guy at the front, but it's not intimidating. It's just like, you know, a $340,000 car is here and a $100,000 Birkin bag is in that one case and a Babe Ruth signed baseball is in this other case. And they all have these crazy stories around them. Be able to tell that story one-on-one and let people actually see the asset, understand it, was always the most important part of this business for us. And we kind of got that with our storefront, and we translate that as best we can to the items that we sell in our retail store, either here or online. And it's worked really well for us in terms of communicating and creating conversation outside of just the app. I think that's always been super important to us, but it's been more important now that we realize we can't have it open for the time being.
Yeah, no, that's amazing. I mean, I couldn't imagine just walking by and not like checking it out. So
that's we want to create that moment. Like, we get so much foot traffic. We do around 350 people a day on a good weekend before all this happened. But the whole idea is that people walk by, maybe they're going to StockX or going to Supreme or going to Maison Kitchenet next door to us, or just going to dinner across the street. But they walk by and like they kind of look inside and stop. And they're like, what's going on in here? And that's been like the best driver of conversation. Those people come in, they stay for 20 minutes and have a conversation about every single asset here with our retail staff. And that's been a really important part of building this business.
That's amazing. And I mean, I'm sure when you even kind of break down, you know, the high rent for, you know, user acquisition, you know, it's a deal considering the, you know, performance marketing.
And honestly, like, it's expensive. I'll give you that. Yeah. That being said, the way we could justify it is based on impressions, foot traffic. We do enough merch in our store here and now online to justify to break even a little bit. But we also started running events here too. So we had a bunch of like hedge funds and startups and people that want to be around cool stuff. And we staffed that. We have a bar set up here. So you can come in and we kind of started renting it out, making a little bit of money on it as well. But more so, one door down on the side of our building is Gucci's billboard, which is their big New York billboard. It's around 300 feet high, but it's there every month. They change it up and they paint some new thing that they have with the new campaign. So they pay $116,000 a month for that. So for us to pay like a little less than $30 a month for our retail space made no sense not to do it. It just was justified by the fact that this neighborhood and the traffic in this neighborhood is so important to spending habits that we're able to justify that to our board and to the powers that be internally to spend the money on our storefront.
Nice. And is an LA store coming up soon, or?
That's the plan. We were going to do Fairfax, and we had a couple of spots that we were looking at specifically. We thought about Santa Monica. No matter what, that's definitely next. How quick we get there, we're not sure yet, but we have some spaces picked out, and I'd much rather be in LA in like February than be in New York. I can tell you that much. So.
Yeah, that's awesome. Yeah. I'm definitely looking forward to checking it out when you guys are here.
Yeah.
So, hey, so we're gonna do a little bit questions here in a second. I actually have a few more questions myself, so I'll probably jump in there. But hey, Dan, did you want to come on?
Okay. Can you hear me?
Dan, what's up, man? Hey,
you guys can hear me. Okay. First of all, absolutely fascinating. You know, one of the great things about this everything marketplace is that getting to meet you and hear your idea. And,
I sincerely appreciate it, man.
I'm a little older than you guys. When I was in college, my best friend, when we graduated, started a magazine when desktop publishing was just getting started called Wizard, The Guide to Comics. I don't know if you ever heard of that.
Yeah, and I'm familiar with it. That's awesome.
And he created—
That's like folklore comic history, man. That's awesome.
Yeah, and so one of the things he did was the last like 15, 20 pages of the magazine was a price guide. And he created essentially the market. There already was a diamond guide, but it was really like the yellow pages.
Yeah.
And the market exploded. And he had such an unbelievable understanding of it that ultimately they wound up creating assets like individual cards, because the comic book publishers were so beholden to his magazine that they were interested in making one-off cards.
Yeah.
And he was able to, obviously his business itself, not unlike yours, it's really a market maker in these categories. But their revenue was on subscriptions, and it drove subscription. But by creating these assets, they all of a sudden were in a way printing money.
Yeah.
And I'm wondering, I mean, you're obviously similarly gaining unbelievable information about similar markets. How are you making money? And then are you finding that you're getting information that is teaching you how to actually create assets?
That's such a poignant and perfect question, because what we've seen, and a lot of people that paved the way, Wizard is one of them, with the idea that information wasn't accessible. So there was a small group that has access to everything, and they're the ones that trade the information between them. But now, like, the newest iteration of Wizard is like Go Collect and a few other platforms that really surface the data. But the same way, you see where the trends are going by doing a little bit of social listening around it. So what we've seen, and I'll give you the real tangible example, is on video games. So video games are kind of a new frontier. It's something that hasn't gotten the same traction yet as baseball cards and comics, but it's starting to become a burgeoning asset class in a very real way. The population reports are so hard to find on individual games, so no one really knows how many exist in box, sealed, with the right grade. No one's 100% sure, but they do know that for someone like me, and for what it's worth, everybody over age 25 is the same age. Basically, we're all the same age to some degree. Everyone remembers the 90s and the 80s, but like Mario Brothers is a brand that everybody recognizes. And for us, we started making purchases in the video game space a little over a year ago, before a lot of the big up and to the right moves happened, with the idea that as a business, we do a small sourcing fee on individual assets, but typically we have the seller pay that, so we don't pass it on. But we're investors in these assets as well. So we're not necessarily a hedge fund, but we want to make smart bets. We invest up to 10% of our money into each asset off of the operating books, and we can't sell until the asset sells. But we are in a position, I happen to have it next to me, the same way your friend did it. Like, we knew that Mario was going to be big, and we made these really heavy kind of gold coins around it as our own version of a collectible. We numbered them to 200. They sold out immediately, and now they're on eBay at 3x. Like, we priced them incorrectly, basically.
So
that
are
was one
you giving
element.
a few out to like a buddy and saying, listen, go to this thing and just report back to me what your experience and how much you get for it?
Absolutely, 100%. We're always down to do that. We do it. So that's one element of it. So we have the merchandise and the sourcing fees around it. The second aspect, we always want to sort of earn our users' money before asking for it. I've always looked at that as like that's something that a mentor told me a long time ago, but it's something that it translates to every marketplace. The idea of brand loyalty is so much more important now, because there's, to your point, access to information isn't like it was back then. If I want to go somewhere else, I could easily Google where it's available for a cheaper price, and I'll go there. It's how Amazon made all of their money, you know? So for us, creating that brand experience, the brand loyalty is super important. As these individual users and members of our platform build reputation, we'll open up some of those subscription fees, and it's going to be a bunch of private syndicate deals. If you and a bunch of friends know something that's coming up, you want us to source on your behalf, that's one way to do it. Another way is we're starting to talk to a bunch of museums and third-party institutions now. Our users want access to what they have. They need a little bit of money to sort of keep the doors open right now, more than anything else. If we can meet somewhere in between and do some sort of almost like a licensing deal, but for us to get access to their stuff, they'll pay us the opportunity to put it on platform. That's another method of doing it. Then the institutional component. So like all those things together, we have a lot of optionality around it. We have a great group of investors who funded our business in a way that they know that building the platform, getting to 1 million investors, and getting to a point that we really monetize in a way that's aligned on both sides is important. And we're slowly getting there now. It's rapidly increasing quickly, but we've done well in making money off the assets right now. And that's something that we're going to continue to do going forward as well.
Awesome. That was a great question. Thanks for sharing more on that too. Cool. Hey, Juan, did you want to come on?
Yeah, no, definitely. I downloaded the app. Looks nice. Really like it. Like the experience. Definitely a great job there. Do you store all your assets in a building or anything like that? I don't know if you
we do. We keep anything that either hasn't gone public or is kind of like the spotlight offering that we want to give people access to, typically stays in our museum space here in New York. That'll be for a short period. Typically, like everything that's here right now goes down to our Delaware facility end of this week, and we'll rotate out anything that's coming new. And we'll do like private visits and stuff right now, as we can't kind of open to the public, but we'll be opening again soon. That's one aspect of it. The other side, and that we usually do that as well to build some content. Then the bigger space that we have two. One is in New Jersey, and that's a 24-hour concierge space for our vehicles, for all the cars. So we have around 60 cars there right now. There's a closed circuit camera that we're going to start surfacing into the app as soon as sort of legally we're permitted to do it, and we can work out some of the licensing around the feed. And then we have a Delaware facility that's more of like a fine art storage that, again, similar situation, 24-hour security, full-time concierge. temperature controlled, everything maintained with some of the most expensive pieces of art in the
Very
world.
nice.
So it was one that, from an insurance perspective, everything we do it at scale. And so we've been able to drive prices down for us, the cost to us on the insurance, storage, maintenance, in a way that I think eventually that can become a profit center. And we can do something where we pay dividends back to investors on the fact that, you know, Haggerty is the preferred sponsor, insurance partner of this particular Aston Martin or something like that. That's something we're experimenting with as well, but always maintained in a professional facility, bonded, insured, 24-hour security, all that type of stuff. We're going to do more to surface the actual camera feeds into the app sometime soon as well.
Oh, very nice. I had a question. I'm curious, what's the percentage of your investors actually purchase the product or the asset, you call it?
So it's weird because the people that buy the whole, like buy a whole car or buy a piece of memorabilia, they're typically not users. We've gotten a lot of interest from those individuals, but we're trying to make a world where if you have 4 friends and you want to sort of source the best possible asset, and we happen to either have access to it or have it on platform, do it in a way where you can make that investment, but it becomes yours for X amount of time, or it's something where it's in one space for you and your friends to be a part of. That's always an important part of what we do. That's going to be a bigger part of 2021 for us as well, thinking about how to create real tangible access to these assets the whole way.
Got it. No, that makes sense. Thanks.
Juan, I appreciate it, man.
Awesome. Hey, so Rob, so I actually did have a question. As far as you were talking about the cost, like I guess you could call it like a holding cost or whatnot. So what is that like? We'll just use, for instance, like the example of cars, and you have the storage facility and whatnot. So what is the typical the process look like from a time and resources for purchasing an asset? So for instance, a car, and then listing it, and then storing it.
Yeah, so start to finish right now, we're around 14 days all in. And a lot of that includes the SEC submission, which right now we shrunk it down to around 10 days. So the first 4 or 5 days, typically we have this 18-point checklist that has all the things that are important to us in the acquisition. And for something like a car, it has all the tangible things like mileage and history and provenance, ownership records, making sure all the documentation's in place. That's the initial check mark, and we run through that pretty quickly. The next part, which is almost a bigger part, if not a bigger part to this point, has been the idea that we do this social listening to make sure that it's relevant socially and culturally as well, and that there's going to be enough activity around that vehicle, whether it's going to auction or from the manufacturer in question, to make sure it's front of mind without us having to push a narrative on that individual asset as well. So that's another day or two. And then in terms of the processing and actually acquiring the vehicle, we have 3 different methods. One is a pure consignment model, which is we rarely do at this point, where somebody has an asset, it's priced correctly, we'll put it on platform. More often, we'll either buy opportunistically off of a credit line that we use, a facility that we have just for buying, not from the operating capital, or an owner of that asset who's made some money on paper, but hasn't necessarily gotten any liquidity out of it, will securitize maybe 60 or 70%, keep 30% of it and play the upside with everybody else because they still believe in the asset, but they want to get some money out of it without loaning against it. So that's been a really interesting wrinkle for us the last year, more specifically, that we've seen more individual owners of assets move towards. Then part of that sourcing fee that a lot of those people that we talk to are sort of immediately on board for, because if they went to an auction house, it's a 25% premium.
Yeah.
We'll charge somewhere around 5%. Some of that money goes into the bank account for the car for ongoing storage and maintenance, which is typically under $1,000 a year for us right now for an individual asset.
Nice, nice. And then, so another question that I had for you is just given that you're across so many different categories right now, and I'm sure that, you know, a lot of the existing players in the spaces are super interested, you know, in what you guys are doing, kind of leading the way and trying to work with you. How do you guys kind of like think about and approach partnerships? Because I actually just noticed, I think you guys partnered with Topps recently.
Yeah, that's a good question. I think it's something that we've always looked at the leaders in the space, the people that we want to work with. So when we think about someone like a Topps, we've been having the conversation with them for 6 or 7 months, let's say. A lot of it was on the legal and regulatory side because we're not broker dealers right now. We're not in a position that we want to be selling stock or have someone else selling stock on our behalf. We just want to tell the best stories, put it in front of the most people, and have them make the decision, those investors make the decision whether or not to invest. When we think about partnerships, someone like a Topps makes sense because A, they're the category leaders, the same way we feel like we're the category leaders in alternative investments. They're category leader in baseball cards and soccer cards, which are 2 of the spaces that for us are super important. They have access to the inventory. They have access on social and sort of through the channels that they use right now to articulate why something's important. And they also have the best inventory. So for us to go to them and say, we want to do something really unique for our investors, they're so on board, someone like a Topps, and every partner that we want to work with is so on board and understanding that the purest mentality around some of these asset classes, and baseball cards, a perfect example, isn't always the best method for acquiring a new set of eyeballs. And trying to find a 17 or 18-year-old who cares about baseball cards, it's a little bit easier now than it was a year ago. But it's not like when we were kids and you're 9 or 10 years old and you and a bunch of friends have baseball cards, you're trading with each other. You're not thinking about it as an investment. Now it's become a true investment. And someone like Topps, I think, really understands that to be the leader in that market and stay the leader, you have to continue to innovate and do things new and partner with platforms like ours. And we feel the same way about them, some of the legacy platforms. So anytime you have that sort of crossover where everybody sort of has those same principles and values and understands where the space is going, those are people that we want to work with. And they've gravitated towards us a lot too. So it's worked out both ways. Nice.
Yeah. Thanks for sharing more on that. Yeah. I think it's super interesting as far as you just see like the new kind of even partnerships, that they do as far as with like Ben Baller's cards and then what is it, Gregory Sith, and it's
great. And then like King Saladin and all these individual R's and Don C. And these are all people that are in our network too. So like it made no sense not to be a part of Topps. Topps is talking to Ben and Don and Saladin and all the people that we keep close. So it's like it makes no sense not to have those people who recognize that value. For us to not recognize it would be stupid. And for Topps to not see that we're part of that wave would have been a little bit weird too. So I'm glad that one worked out.
Yeah. Yeah. So what is your guys like team or like, the org kind of structure look like? Just given you have so many categories, so many relationships, I can only imagine, everyone from, fashion to, Birkin bags to cars to, watches.
Yeah. We've been lucky in that we kept a lot of great people around us. So we have a lot of people that have been around since day one. That in each individual asset category that are essentially our liaison into that world. And they're the ones that make a lot of the qualifying decisions for us when we're at a coin flip decision, with like auctions and with the way baseball cards and sports cards are moving. We kept a lot of great people around us from those spaces. So we work with the teams at a bunch of the major auction houses, but more so with a lot of the individual collectors who are the brokers that live in the middle. And they know what we're looking for. They know the price that we're willing to pay. They know they want to be a part of this business. In some cases, they'll have a little bit of equity, or they'll have some sort of consulting agreement that makes sure that, they're a part of this process in a way that if we have success, they have success. And they're the ones that kind of come to us after we have that checklist. We'll put that out for like, if it's 80s era football cards, for example, we'll have 3 or 4 individual people that are working on or with our team that are always constantly sourcing. Once weekly, they'll send us the checklist. Here's what we found. Here's what's available. Here's what the deals might look like, and here's how quick we can get them done. And if that meets our criteria, we tend to move really, really quickly, which I think has been really encouraging and has been helpful for us to bring those third parties in, knowing that we're not going to sort of beat around the bush and we're not going to be in situations that where we know the value, they know that we don't negotiate on certain things, they know we will negotiate on others. And that's been really helpful to have that criteria set in place for them to go out and do what they do best while we maintain the platform, which is what we do best.
That's awesome. Yeah. I mean, let me know if you guys are ever hiring for the liaison. That sounds like a dream job for cars and watches.
I mean, honestly, like we need more watches. I might throw you a check at some point trying to figure this thing out.
Yeah, that's awesome. So yeah, I mean, it sounds like you're, have like a personal kind of interest and obsession as far as, the asset classes like I do. Could you maybe speak to that? Like what keeps you motivated personally kind of, with the business and your interest? Maybe like some of your personal kind of favorite items you guys have listed too.
Yeah, I mean, when we started this business, there's a Jaguar XJ220 on our platform right now, which was like my dream car as a kid. But more so, like I have a lot of memory. I had a great childhood, right? I grew up in Brooklyn, and I was living in my grandma's house. There was always people around. But like I was so into design. I was so like by myself drawing all day. That was like this car that I would always draw. I had the scale model in my room, and that was like a thing I remember when I was a kid. Getting access to that car was one of those things that made this very real for me very early. And then it turned into these obsessions I didn't know I had. Like I've always loved technology, obviously, and I love art, and I love and baseball cards, something that I collected as a kid and have so many great memories around. But to be able to be around and hold and see and be able to sort of access these things that I didn't even know existed. So like we had we have one of the first ever Apple Mac 2s that is signed by Steve Jobs and the whole team that created this particular model. And it was a really weird inflection point for Steve between Next and Apple and back to Next. When that came to the office, it shut the entire office down. Everybody was like hovering around it and looking at the documentation that came with it. That type of stuff is what motivates and drives this team, I think, right now too, to get access to stuff that no one even knew existed and have that show up here is really important. So to do things in a more tangible way with things like this store and some of the pop-ups that we'll be doing and tell that story is really important. And that's especially true for like technology, for some of the NASA stuff that we're getting right now, which is one-of-one type stuff from the Apollo 11 missions, things that really are history, but at the same time, not the history that in high school you were forced to learn. It's like brand new history that you can really understand it from the ground up. That's kind of what drives a lot of the motivations here.
Yeah, that's awesome. I mean, that's definitely worthwhile. And I would say that you guys have successfully been able to, I think, take that same kind of like feeling, and realization to others or, your community and users. So.
Thank you, man.
Awesome. Well, cool. We're about to wrap it up here because we're almost out of time. But is there anything that you wanted to kind of share with us? Maybe some, learnings along the way that would be helpful for us as marketplace founders?
Man, I mean, I think that one of the biggest things, like, this is going to sound crazy, but one of the biggest questions that we had to ask ourselves early is like, do you want to get super rich, or do you want to build something in a space where it doesn't exist and really build something from the ground up? That's something that we were very deliberate about early. And I'll be honest, in building any marketplace, it's something I wish I thought about more in the beginning. It's not wrong to think that way. If you want to make a ton of money doing something, like, that's completely fine. There's exitable opportunities to do that, but it will change the dynamic of your business. So if you're putting together a team, half the people are there for money, half are there to really build, it's never going to be that same mission. So like really focusing on that mission is one thing that I think we did really well with Rally. Knowing we want to build something that was potentially generational and not a cash grab was a really important part of the earliest possible conversations. And I think there's still something to be said for that. And there's absolutely nothing wrong with wanting to make money, but to not have that clear vision, especially when there's a founding team of more than one person, is the most important part of what we built with this business so far, I think. And that's something that I'm going to take regardless of whether I'm here forever, start something new, or go open a coffee shop somewhere, which is hopefully I can do at some point in my life and not worry about making money. It's one of those things that Joey's thought about early on and that we were very deliberate about early on as well.
That's great. Well, we couldn't end it on a better note. So just quick kind of plug, where can we keep up with you?
So on Instagram, we're at Rally. RallyRD.com is our website. It tells a little bit about everything. I'm Rob Petrozzo on every platform. And honestly, like, my phone number, my email, everything's already out there. Text me, call me, email me. Any questions, feedback, anything about this business or about any business, like, I'm always down to have the conversation for sure. Awesome.
Well, I greatly appreciate your time. And yeah, thanks for joining us. This is definitely great, super insightful. Huge fan of what you guys are building, and we'll keep rooting for you guys. So
likewise, man, huge fan of what you're building too. And I said it before this call started, there's so many different sort of groups and marketplace groups. This is one that's been really successful, and it's great to see how much activity is on that platform and how much people are sort of engaged and learning on the way. So anything I can do to help push from behind, let me know, man.
Awesome. Really appreciate it. So thanks again for joining us. All right.
You too.
Thanks, Rob.
See ya.